having that customer care. Because every client is different, right? And everything, something different makes everyone tick. And you just have to figure out who you're working with, right? Especially, I'm still considered, frontline in my business. So I'm, face to face with a lot of my clients, understanding, relationships with people, understand how to work with them. That is probably something that, has opened my eyes because it's very different for every single person. And, as I continue to grow, I have to become more flexible with, the different types of personalities that I deal with.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I am your host, Yonah Weiss. Excited to be here today on this beautiful day. It is winter. It's a little bit cold, but we're going to have a warm conversation here with Grant Dougherty all the way from Houston, Texas. What's going on, Grant? How are you doing?
I'm doing all right, man. How's it going, Yonah? Thank you for having me on here, man. It's a real pleasure.
The pleasure is mine. Always love to, expand the network, meet amazing people through this podcast, through social media, and then bring it kind of to life and be able to share value with our community and with our audience and our listeners in more ways than one. So for you guys who don't know who Grant is, he is an accountant. He's an enrolled agent based in Houston, Texas. Funny coincidence, I didn't even think it was until now. The last enrolled agent we had on the show is also from Houston, Texas. So pretty cool.
Oh, nice.
I don't know if you know Michael Plax, the real estate, what does he call himself? The real estate ninja, something like that.
Oh, you know what? I'll have to look him up. I'll go ahead and do that. I'll look him up here shortly.
He's a good guy. Michael is a good guy. Anyways, Grant, pleasure to have you. Why don't you tell our listeners a little bit about yourself, a little bit of your backstory, before we get into the show, so people have some context who we're actually talking to today.
Yeah. So I'm Grant Dougherty, born and raised in Houston, Texas. I actually went to school at a university just northwest of the city called Prairie View A&M University. I actually played sports there. And so while I was there, I studied business, and I also got a master's and MBA from there as well. Started off working out in corporate America. And then, while I was working there, I actually started my own, side bookkeeping business. And that's how it all started.
Really?
It started off as a very small bookkeeping business, gained some knowledge there, decided to take it up a notch and move into taxes, and then realized I need to get licensed. So now I got licensed. I got my enrolled agent license. And, I created my social media account along with that. And next thing you know, it just grew. And now that's what I do full time. I don't even work in corporate America anymore. I do this full time. I'm probably busier now than I was back then, though. So, but it is all a joy.
That's great. So you have a small, accounting firm where you're actually helping people who own businesses or real estate. I know you're in the real estate game as well. Mm-hmm. Tell us a little bit about who is your ideal client now that you have your own firm?
Yeah. So, the ideal person who I work with is going to be small business owners and real estate investors that make less than $1 million a year. That's typically who I work with. And, now as far as small business owners, it is a broad range. I work with, real estate agents. I work with people that own small medical facilities. I work with all sorts of different, business owners, right? So, and then I also work with smaller real estate investors. I think the largest real estate investor I work with has maybe around 50 properties. So sure. That's a lot, but it's not anything that I can't handle by myself, because I am still a sole employee.
Oh, wow. Okay.
And I am still growing, rapidly. So I have some contractors that help me out during tax season, but no official employee. That is going to be the next step that I take in my business. So I'm still, a small business myself. So I'm very familiar with, the small business environment.
Sure. And the ins and outs of businesses, I'm sure you learn a ton as you go. And any great accountant is constantly learning, because there's so much to learn in the tax code is almost seemingly endless. And,
right.
And trying to go through it and all the court cases and all the ways to, the nuances are really tough to tackle. So, it really does take someone who is in that kind of growth mindset to be able to really tackle it and grow their own business that way. It's pretty amazing that you're still in that stage where you're able to handle everything yourself. I think obviously there's going to come a time when you're going to hire some employees, some other accountants to handle a lot of the tax work.
Yeah. Oh, yeah. As far as tax work, I handle all the tax work right now. But there's like a lot of administrative tasks. So like I have like weekly emails. I have like different things that kind of go on to help my brand build.
Sure.
And so, I work very closely with these contractors, and I mean they're almost employees, but technically, I do know that, that's one of the things that small business owners need to understand is the difference between a independent contractor and an employee. Very, very important different, distinction that you have to make between the two. And so they are technically still independent contractors, and I don't have any full-time employees, but they are still very much integrated into my business system and growing my brand.
Sure. No, that's awesome. And I think it's pretty incredible that simultaneously you've been able to grow that brand, grow the business. The social media presence surely resonates with a lot of people. I think
Right.
taxes to a lot of people are like this kind of mystification. I don't know what the word is I'm looking for, but it's just in a cloud of mystery of what really you have to do. And so people rely very heavily on their trusted advisor, their accountant,
Right.
to point them in the right direction and make sure they're staying out of trouble and make sure they're, doing the right thing.
Yeah, no, and you brought up the staying out of trouble part. That's the big one, right? There's, especially whenever you get into, small businesses and real estate, there's just so many nuances where, technically, okay, for example, that can be expense versus, okay, that needs to be capitalized in something like real estate. And actually understanding the nuances behind that is very important, because you definitely don't want to go down the road thinking that you can just expense the repairs on your roof or something like that. So,
Sure.
or, I guess repairs is different, but if you're like replacing your roof, you can't just expense that, right? So, and that would be something that, I commonly run across, especially with like brand new real estate investors who are just getting into the game. That is something that, they didn't even realize that they had to depreciate a brand new roof versus like, okay, I thought I could just write off $15,000. Like, no, it doesn't quite work that way. And the same thing goes with business owners, right? Everyone wants to talk about, oh, let's get into the S corp. Well, there's a lot of nuances that come into S corp. So first off, let's look at QBI. A lot of business owners don't even look at QBI. Whenever you jump over to S corp, your W-2 salary plays a big role in now your QBI, and also your retirement contributions for like solo 401k. So yeah, from it may sound good to talk about, let's say, taxes with the S corp, but you're not thinking of all the nuances that go into that. So
sure,
that's just like a quick example.
That's a great example. Can you talk about the QBI? Explain what that is for some of our listeners who may not be familiar with that.
Yeah, so it's the qualified business income deduction. It was implemented in the TCJA back in 2018. It is going to sunset though here at the end of 2025. So in 2026, that's no longer going to apply. And essentially, it is a 20% deduction on qualified business income. What is qualified business income? There's kind of complicated, but anything that is, and you may need to clarify for me just a little bit, but it deals with the specified trade or business, right? And then also like your income limits. And there's like a lot of nuances, but understanding like just the overall idea, whenever you switch over to an S corp, now you have to implement like in that calculation your W-2 wages. And so you definitely don't want to cut back on a potential 20% deduction that you could have had if you were just like a Schedule C sole proprietorship versus an S corp.
Sure. I mean, that's a perfect example of really proactively planning and thinking, what is the income level going to be? Where can I actually be making, the most money or saving the most money through a different tax structure, like an S corp or sole proprietorship or something like that. So that's a really great example. And there's so many things like that business owners don't necessarily think about. That's why they rely on their bookkeeper, their accountant to make sure they're staying out of trouble, but more importantly, proactively kind of setting up the right structures to make sure that they're, saving as much as they can.
Correct.
I'm curious to know, over the years since you've been doing this, not so many years, but obviously you're still a youngin over there, it looks like. But I assume you've been doing this for a few years already. I'm curious to know what's something that you've learned maybe recently in the last year or two that has kind of changed the way that you're personally either doing business or relating or helping your clients.
Yeah, it really is all about customer service, right? And you can understand the tax language, the tax knowledge, that is to be expected as a tax advisor. But then now having that customer care, because every client is different, right? And everything something different makes everyone tick, and you just have to figure out who you're working with, right? Especially, I'm still considered, frontline in my business. So I'm, face to face with a lot of my clients, understanding, relationships with people, understand how to work with them. That is probably something that, has opened my eyes, because it's very different for every single person. And, as I continue to grow, I have to become more flexible with, the different types of personalities that I deal with.
I mean, and that really is true for any business. I mean, customer service and that communication, that's a gap that really differentiates between a great business and an okay business.
Right. Yeah, people want to feel like that you actually care about their situation. And so, okay, yeah, maybe their plan didn't work out the way they wanted it to, but that's why, you explain to them, okay, this is why, this is how it can be done differently, and different things like that. So I get a lot of people that come to me, wondering why, not even wondering why, but they just felt neglected by their previous accountant. And so I try to learn from that. I don't want to feel, I don't want any of my clients to feel like as if they've been neglected, essentially. And then, some are very relaxed, but some need a little bit more proactive care. And it's also the way how you deal with them, right? Some like to be a little bit more friendly. Some like to just get straight to business, and it is what it is. Let's just talk numbers. And so understanding what makes them tick is very important, and, at least in growing my business.
100%. And do you see, I mean, a lot of your clients, you said a lot of them are small business owners, real estate investors. Has that at all, kind of trickled over to you in terms of, are you investing in real estate as well? Or, besides your own business that you own, obviously, you're a small business owner, but any other businesses that you've been involved with?
So I currently only own real estate through a syndication. So I don't personally own any in my personal name just yet. That is a goal. Most of the money, though, has been poured back into my business. So I've been, rapidly investing back into my business to grow it, hire on different contractors and different things like that, different softwares, all sorts of different things, but I do invest outside of my business. Of course, there's retirement plans. You got to take, advantage of retirement plans. But then I look at different syndications, different larger, platforms where I can, probably dump like, a few, several $1,000s over there and start to get my investing in real estate, more of like a diversification strategy. But to grow that, I do want to. So currently, and with interest rates change, different things have changed. But we want to actually take our current home that we are in and move out and turn it into a rental and possibly get a new home. However, there is that home exemption that we have to consider, because we have seen some substantial appreciation and we can get some tax-free income that way. So there's like a lot to think about, for our personal situation right now. I am married with a wife. We have 2 kids. We're planning to probably grow our family. I joke around all the time and tell people that I want a basketball team, so, my poor wife, she I don't know if she's down for that, but, I joke around and say that I do. I want a large family. I love kids. And so that, along with that, I do want to create streams of income. And so, eventually I do want to start physically owning, rental properties in my personal name and receive rental income that way.
Sure. And syndications are also a great way to invest in real estate. I do hear a lot of people kind of promoting investing in REITs as a form of investing in real estate. And I don't really think that it's talked about enough, but it's not really investing in real estate if you're investing in a REIT. It's more just investing in a stock.
Exactly. I would consider that more of like a stock. I could buy that in like my Roth IRA if I wanted to.
Exactly.
So I'm talking, syndication where you receive a K1. That's what I'm talking about. That's a little bit, that's a little bit different, but I mean, REITs are good options. I wouldn't just say, don't invest in it. I'm not a financial advisor, so don't take my financial, the way how I feel about finances too seriously. But, I think they're okay for diversification purposes.
100%. And about that, kind of investing, or you mentioned briefly about the home exemption. Can you talk about that? Because it's something that I've obviously come across. If you're living in a home and then you sell it or you place it in service as a rental after a certain number of years, it's a Section 121. Is that correct? Can you talk a little bit more about what that is?
Yeah, so essentially what it is, if you use a home for a personal residence in 2 of the last 5 years, you can sell that home and exclude the first $250,000 of capital gains if you're single, and it's $500,000 if you're married filing jointly. How long have they
That's
had
awesome.
those saying? How long have they had those? The 250 and 500. That's been around for like,
It's been around for a long time. Yeah.
yeah, no inflation adjustment or anything.
Right.
So, but hopefully they eventually do that. But that's what I was talking about earlier is that, okay, we have our personal home, we bought it, we've lived in it now for about 3 years. So we would qualify for the personal home exemption. And it's just, it's just one of those things like, okay, we could come across a large sum of tax-free income. And now our options now, if we wanted to potentially buy, a rental property in our name, we can do that and probably still have cash left over. I mean, there's so many different things to think about, but in a roundabout way, that's essentially what it is that, you can exclude the first 250K of gains or $500,000.
That's huge. And that's a huge thing, and people, another great reason why you need a good accountant is you might just be missing out on this deduction if you didn't know about this. If you sold your home and you lived in there for 2 out of the last 5 years, guess what? You could be, looking at hundreds of thousands of dollars of tax deductions that you could be reducing your capital gain from. So that's huge. I know my parents recently sold their home that they lived in for 25 years. And it had appreciated extraordinary, a huge amount. I mean, in California, in Southern California,
oh yeah,
it appreciated by like 3 times what they paid for it 25 years ago. And that deduction obviously was a huge factor that, they reduced their capital gain there tremendously.
That's awesome. Yeah, no, that's awesome. I think for, especially for, people who are still on their wealth building journey, if you have, now, of course, there's a lot to think about, right? Because if we dispose of this home, now we got to get a new home. Prices have appreciated, interest rates. Yeah, there's a lot of factors you have to think about. But from a wealth building perspective, right? You're increasing your net worth potentially by several $100,000. And depending on where you are in your wealth building journey, that could be a huge jump for you, right? So, and again, if you're much further along in your wealth building journey, okay, yeah, you might as well just turn it into a rental, and long term, receive that rental income, get the depreciation, a lot of factors. But if you're, just still on your journey, I think that is, one of the best, incentives out there in the tax code for building wealth.
Huge. Huge. I mean, and again, there's so many things like this. Any other ones that come to mind, just fun things that maybe, I know you mentioned briefly the retirement accounts, and that's something that I'd love for you to kind of talk about, because I was thinking about what other things people may not be so familiar with that you need to know if you're a business owner, or even if you're, a W-2. There are things like investing through your retirement account or maxing out your retirement accounts, things like that can actually be great tax advantages.
Yeah, no. I mean, and the most common one is going to be like your 401k, through your employer. But for the self-employed, you can actually do a solo 401k, which is like a traditional 401k, but on steroids, because, there's that employer contribution that you can make. And, in 2022, the max was 61K, and of course, it's not just a flat 61K. There's that's one of the nuances that you probably want to work with a tax advisor on to understand how much you can contribute. But the max is 61. I believe it jumps up for 2023. I believe it's 66K. So, you want to talk about a large deduction. That is like an awesome way to essentially get a tax deduction while at the same time building wealth, because now you're putting that money to use. Hopefully that, over a long period of time, you get a return on your investment. And that's the idea of something like that. But outside of just that, you have SEP IRAs, you have Roth IRAs, which I think Roth IRAs, are one of the best wealth building tools, because, okay, not only for yourself do you get to create a bucket of tax-free income, but in the event that you just never use your Roth IRA, you can pass that down to heirs and they can receive the same tax benefits you would have. And it can not go through probate, correct?
Right. And that's an amazing thing, right? There's so many things like this with retirement accounts when passing down. And that's something I didn't even know until recently, that you can do something like that. And so there's, again, just another great way to use your retirement account. And not only that, maxing that out, but then what's even better, putting that on steroids, is really then self-directing that retirement account and then using that to invest in real estate or in other assets.
Yeah, all sorts of assets can go. When you start self-directing it, you can put almost like whatever you wanted in there pretty much. Yeah, I mean, animals, all sorts of things,
Animals? What do you mean?
Man, I heard that you could put, if you want to invest in like, an animal or something like that, you can put it in a self-directed. I don't take it too seriously. I just heard about it. Mostly people use self-directed IRAs to invest in things like real estate, silver, coins, things like that. But whenever I say you can invest in almost anything, someone once said animals, and I was like, I think you actually can.
If it's an investment, sure, yeah. I mean, if it's an investment,
yeah, you can.
I mean, I've never heard of an animal as an investment, but I'm sure they exist. Like, if you buy a racehorse or something like that, right?
Hey, man, I'm in Texas, man. You run across all sorts of things. So, yeah, man. Texas it used to be its own country. Let me just put it like that. That's the best way to describe it. But yeah, man, self-directed IRAs are a great option. And then even like the traditional IRAs, those are great options too, because in the event that you ever wanted to fund, a Roth IRA, you may actually need to do the backdoor, and you would need that traditional IRA open in order to do something like a backdoor Roth.
Sure. I mean, does that get complicated at all when setting something like that up, or is it pretty standard practice?
The backdoor Roth?
Yeah.
It's pretty standard. What you would do is you would first make a contribution to your traditional IRA, let it sit there for a few days, and then you would do a Roth conversion. Now, one thing that you would have to consider whenever doing Roth conversions is, if you have a Roth IRA, you make a direct contribution. You can pull out your contributions whenever you want, penalty and tax free. However, if you do a Roth conversion, that's not considered a direct contribution. So if you did a conversion, you would have to wait 5 years before you could access any of your contributions to that. So I would be hesitant, of trying to access money. Only put away money in a Roth if you're not going to need it. But then you would have to file Form 8606 during tax season, because that is going to be the form that lets you know that you made a non-deductible contribution to a traditional IRA. So that's very important.
Yeah, so cool. What's one of the tax forms that you fill out that is kind of unique that you've come across from small business owners that don't get too common?
Casualty losses.
Casualty losses. Sure.
Yeah, those are always complicated. I can't remember the form number for it, but casualty losses, I'm going to have one person this year who had like a property get burned down in like a fire. So I'm going to work on that. I'm not too sure exactly how that works. I still got a lot of research. I've looked at the form and it's very, very complicated. It's really, really long. And then probably another one would be like an accounting change, accounting method change. Those are always fun. Usually you run across those whenever you do like cost segs on like old properties. So,
sure, exactly.
But those aren't terrible, but they're definitely not your standard, your Schedule C's, your Schedule E's. They're not your standard forms like that.
Absolutely. Yeah. It's funny because the Form 3115 that you're referring to, the change of accounting method, is something that, we as a conservation firm, we actually do that for our clients at no extra charge, because it's something that accountants, it's like, if you're not used to it, if you've never done it before, you rarely do it, it can be very daunting to fill something like that out. It can be pages long sometimes. And so I've had clients come to me and tell me that my accountant says that since I've owned this property for a few years, I can no longer do the cost segregation on it. And I said, well, that's not quite accurate. You just have to fill this 3115 form. And they went back to their accountant and realized that really what the accountant was trying to say is that they don't want to fill out this this form, and so it's not possible to do it. That's unfortunately they weren't giving the full discretion to the client to make their own decisions, but informed them that we actually do that on behalf. And he was ecstatic. The accountant was ecstatic. He's like, "Oh yeah, okay, so then go ahead, do the cost because it's just funny."
It really is. So taxes is one of those things. With time, you get better at it, right? So, and the reason you get better at it is because you're constantly doing these it's a bunch of different forms, but a lot of the forms you see over and over and over again, right? So whenever you do a 3115, thank you for reminding me. I couldn't quite remember the numbers, especially the uncommon ones really will slip my mind at times. But the 3115, it's several pages long. And I remember the first time I did it, it took me a while. I had to call some people, I had to do some research.
Right.
And I've only done it a handful of times. I don't handle. That's actually really good that y'all offer that for free, because that would help out a lot of tax professionals. Speaking from experience, from someone who doesn't file that form too often.
100%.
But yeah, like your Schedule C's, your Schedule D's, your Schedule E's, 8949s, all those are all going to be relatively common. But then you get your 3115s, though, accounting method changes. That's a good one.
Yeah, it's fun. It's always cool to hear about these different forms and different things going in, what goes behind the actual accountant's day to day, because it's a lot more complicated than you may think. But obviously, as you're growing, I'm sure you will bring on more employees, other accountants to be doing more of the tax work itself. In fact, I have a accountant friend who's real estate focused, and I think he has 20 employees that work overseas.
Wow.
And so that he's paying literally, I think they're in the Philippines or Nepal, but they are, they're accountants, they're licensed, and they work for, a fraction of the cost. And so he's able to get a huge amount done, at a
I've
fraction
heard
of the
about
cost.
that. I've heard about that. I've heard mixed reviews, so it's good to hear that this is a positive because, I've heard about it and I've heard the pros and cons. And
Sure.
so definitely, it's definitely been an option. I've looked into it, not deeply, but I've thought about it and I've done a little bit of research. So that may be something I have to consider now that I've, given it a positive review.
Yeah, I mean, listen, it's something that you clearly have to have, oversight on. You have to have, reviews. You have to have a manager if you're not yourself managing and reviewing everything. But it's something that it's much easier way to scale than I think a lot of people would even consider.
Okay. Okay. No, then that's awesome. That's awesome. Yeah. Because, man, it's tough to really, make an investment on an employee to work with you full time.
Sure.
Because first off, you don't want to get someone on and they just end up dipping. That would be very, very tough. And then you don't want to get someone on that's, they don't have the skill set or the work ethic, right? That's a whole nother level to it. So I guess that's why you offer partnerships, whenever
Right.
it comes to accounting firms. So
Right.
I guess that's one way to combat it. But then again, as a growing business, you don't really want to just offer up parts of your company just like that. But, it's part of growing and it's something that you have to consider.
Sure. 100%. Well, Grant, I want to transition now to what we call the final four. These are 4 questions
Okay.
I ask all my guests. First question to you is, what is the worst job that you ever had?
Okay, so the worst job, I don't know if I can say worst job because I try to always enjoy, if I'm going to go there, at least the people are cool. I'll find a way to enjoy it. But, one of the more stressful and definitely working retail, during Black Friday, during holiday seasons. I'm not going to say it's the worst. I feel like that's, a tough word, but, working retail during Black Friday holiday season is very, very tough and it's very demanding.
Yeah.
And I don't think, I used to get anxiety whenever I would go into a store and I would see the place just messed up because I know at the end of the day, when it's clean, you have to go in and organize everything. It has to be organized a certain way. So yeah, that was probably one of the most demanding jobs that I've had so far.
Sure. Wow. Yeah. Okay. I can't even imagine what something like that would be like, but it definitely does not sound like fun. Second question is, what's a book you've read that's given you a paradigm shift?
Yeah. There's several out there. The Millionaire Next Door, Richest Man in Babylon. Those are really good. Actually, from an investing perspective, definitely it would have been Intelligent Investor. That's going to be one of from an investing perspective, from where I used to be, how I used to invest to how I invest now. The Intelligent Investor was, in terms of investing, a paradigm, a shift for me.
Awesome. We'll definitely check that out and put that in the show notes. Appreciate you sharing that. Intelligent Investor. Okay.
Yeah.
Third question is, what's a skill or talent that you would like to learn?
I would like to be able to speak pretty much any language. I would like to be able to communicate with anyone across the world. So if that meant, Mandarin, if that meant, Japanese, I don't know, do they call it Japanese? I know Mandarin is Chinese,
Yeah.
but I don't know if they call it Japanese. I know actually, being from Texas, I know quite a bit of Spanish, so I can read signs that, you could drop me off in, a country that only speaks Spanish and I could navigate the streets and find my way out. Cause I definitely, maybe not conversationally, I couldn't, pick up on, what you're
Right.
trying to say to me or hold a conversation, but, I could read signs, I could read books, depending on I could read a children's book. I probably couldn't read, Harry Potter in Spanish, but that would be like something, but more languages than that, Portuguese, Italian, all those I would like to know.
Yeah, that's awesome. I mean, listen, once you pick up one, I think the next one after that gets easier. So good luck with that. That's awesome.
Thank you.
Pick up a new language.
Thank you.
And fourth and final question is, what does success mean to you?
Yes, success to me, and that's a really good question. It's really just, being at peace and, at comfort with yourself, right? I wouldn't necessarily put a monetary value on it. Yeah, financial success would be making a little bit of money. And I do think finances does play a role, but, because if you don't have enough, then now you're constantly stressed. Some may even, say that, if you're financially stressed, you'll even go and commit, robberies or, any other types of illegal activities because you need to make up that money. Financial stress is a big thing, but, I wouldn't just put success on that because there comes a point where, it doesn't really matter how much money you make, that it doesn't really make much of a difference. And because I work with people who make, $150K and they're just completely okay. And then you work with people who make, $500,000 and they're not okay, right? So it's, I wouldn't just put a number on that, but being able to, hang out with family whenever you want to, right? That's success. Being able to be around the ones that you love whenever you want to me, that would be success.
That's awesome. That's a really, really great definition of that. I appreciate you sharing that. And, I wish you much continued success on that. Grant, where can our listeners find you or reach out to you?
Yeah, you guys can find me on Instagram at Dougherty Tax Solutions. You could also find me on Twitter at Doe Tax Solutions. So if you just DOU and then Tax Solutions, Twitter has a limit on the number of that you can put in your name. And then you can also find me on places like Facebook. You can find me at Dougherty Tax Solutions on Facebook.
100%. Awesome. We'll make sure to put all those in the show notes. And, thank you so much again for joining me today. It's been really a pleasure catching up and getting to know more about the Dougherty Tax Solutions.
Oh, thank you, Yona. No, it was a pleasure. Thank you for having me, man.
And to our listeners, thank you guys for listening all the way to the end. Once again, and remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.